Everyone's shorts are getting steamrolled as Bitcoin surges to 73,000, but that's not stopping the bears from coming out. Recently, a Bloomberg strategist put out a note calling for Bitcoin to hit $10,000. 10. A former Prime Minister of the United Kingdom wrote a newspaper column calling Bitcoin a giant Ponzi scheme. So original. And the United States Senate voted 89-10 to ban the government's own digital money. With oil still being volatile and over $90 a barrel, the Nasdaq flat and gold not doing anything, people are still wondering, when is the right time to buy? Today, I'm going to show you the setup that this is happening right now and why now may be the best time to buy Bitcoin. Let's go, it's Satoshi time. Welcome back to Simply Bitcoin Satoshi. I'm Sophie. Let's get into it. Bitcoin is at a 1-month high, up 11% since the Iran conflict kicked off around February 27th. Nasdaq flat over the same stretch, gold sideways, but Bitcoin ran. And here's the setup underneath that number. Vettelund at K33 Research flagged it. Funding rates on Bitcoin perpetual futures had been negative for 14 consecutive days, the longest negative funding streak since December 2022. That means everyone was short. Traders were positioned for Bitcoin to go down. Open interest just surged 9% to 700,000 Bitcoin. That's a short squeeze. The people betting against Bitcoin are getting crushed out. Fear and greed was at 15. Extreme fear. Retail was selling. Polymarket had a 62% odds on Bitcoin going below 50,000. And Bitcoin? 73,800. Sound familiar? They bet against it every time. Every single one. Larry Fink put it about as well as anyone did last December.
We're in a world now where democracies around the world are trying to figure out how to curb deficit spending. And, Bitcoin is kind of this new digital gold. People are going to it in times of uncertainty. And so it's tough for them to contemplate a world that is more decentralized and running on the internet.
The head of the world's largest asset manager, $13.5 trillion, calling Bitcoin the new digital gold in front of the New York Times in December. 3 months later, the bears are calling for 10,000. Meanwhile, institutions put $1.7 billion back in since February 24th. I don't think you guys understand what a big deal that is. Okay, I have to talk about this one. Bloomberg Intelligence senior strategist Mike McGlone published a note this week. His thesis? Bitcoin is in a prolonged macro-driven unwind. What does that mean? His price target? Below $10,000. His advice? It's a bear market. Sell rallies. 10,000. Bitcoin is at 73,800 and this man is saying 10,000. It's like he's trying to give me a heart attack. That would be an 86% crash from here. They say hodling's not for the weak, but I'm not that strong. And you don't have to be. McGlone has been saying this while Bitcoin went from 20,000 to 60 to 73,000. The people who took his advice in 2023 missed the rally. In 2024, they missed the halving pump. And now he's at it again. Might as well be the new reverse Kramer. Quantum Economics CEO Maddie Greenspan said getting to 10,000 would require, and I'm directly quoting here, a global liquidity crisis, a nuclear war, and the internet to stop working. All three at once. So thank you, Mike. Genuinely, every single time someone publishes a $10,000 price target, the smart money buys another trench.
Yeah, I think that the 4-year cycles are based on the Bitcoin halving, and the Bitcoin halving was really important for the first 12 years of the asset because we were cutting the amount of Bitcoin that was being cut from the supply was very material, relative to the demand in the market. But right now you're seeing days when Bitcoin trades 50 billion or $100 billion in a single day. The total amount of the halving and the next halving is going to be 225 Bitcoin. So 225 Bitcoin times even 100,000 a coin is it's $20 million a day is the impact of the halving. And so $20 million isn't the first order impact on a $50 billion a day liquidity. It's not even a second order impact.
The cycle argument, the one underpinning McGlone's $10,000 call, just got explained to death by the guy who understands Bitcoin better than anyone alive. The halving used to matter because supply was the dominant variable. It's not anymore, though. Institutional demand dwarfs it. Everyone, breathe. From mid-October through late February, 4 months, there was $9 billion in Bitcoin ETF outflows. $9 billion. Extreme fear everywhere. But then, $1.7 billion flowed back in since February 24th. 3 weeks. BlackRock's IBIT is net positive for the year. $300 million, despite Bitcoin being down 16% year to date when they were buying. James Safar at Bloomberg Intelligence says investors are likely feeling a bit more comfortable that we have hit at least a near-term bottom. They weren't selling, they were buying. While you were panicking, the people managing real money were repositioning. That's the story of every dip. Every single one. And look, BlackRock, IBIT, pension funds, big allocators, they're all buying Bitcoin ETFs. Someone else holds their Bitcoin. For them, that's fine. But for you, you should hold your own keys. That's where the Bitcoin way comes in. Your personal Bitcoin IT team. Self-custody training, cybersecurity, Plan B residency, over 20 years of experience. They simplify the whole thing so that you can stay in complete control of your stack. Book a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. I have to give credit where credit's due. Boris Johnson, former Prime Minister of the United Kingdom, man of many words, a lot of hair, sat down this week and wrote a newspaper column calling Bitcoin a giant Ponzi scheme. His evidence? A retired man from his village lost 20,000 pounds in a crypto scam. God, this is the most boomer thing I've ever read. First of all, Boris, that man's neighbor got scammed by a scammer. Not Bitcoin. That's not the same thing. That's fraud. They're different. So naturally, Saylor fired back immediately. On X, he posted, Bitcoin has no issue, no promoter, and no guarantee return. Just an open, decentralized monetary network driven by code and market demand. BitMEX research kept it even simpler. Nobody is in charge. Community notes added context directly to Boris's post about Bitcoin's fixed supply and open source code. The man who built the world's largest corporate Bitcoin position just schooled the guy who couldn't figure out his own Brexit deal. Boris Johnson, writing a confused newspaper column about Bitcoin in 2026, is the 2026 version of Jamie Dimon calling it a fraud in 2017, while JP Morgan was secretly buying. This is the last stage before one typically starts buying. So we'll see you on the other side, Boris. Now this one. This one is big, and it did not get the coverage that it deserved. The United States Senate voted 89-10 to ban the Federal Reserve from issuing a central bank digital currency through 2030. 89-10. That is not a close vote. That is a statement. The bill language is specific. The Fed cannot create digital dollars directly or indirectly through a financial institution or other intermediary. No workarounds, no proxies, closed. Before the vote, here's what Senator Lummis said about why a CBDC in your pocket would be one of the most dangerous things that a government could do.
What I haven't figured out is how, if you do a central bank digital currency that is directly from the Fed to the retail customer, the you and me, how do you keep it private? I don't know the answer. And I think until we're comfortable that we can answer that, that we need to be very circumspect about creating a central bank digital currency that is marketed to the retail customer. Or if it is, we need to be able to tell the retail customer, warning, this is not private.
She said that in 2021, and the Senate just voted it into law in 2026. 89 senators, both parties, in a Congress that can barely agree on lunch, voted the same way on this. The American people, through their senators, just said, we do not want money that the government can surveil, freeze, or program. 89. That's not a party line vote. That is a mandate. So regulate that. And while the Senate was saying no to government money, Kraken quietly received the first Federal Reserve master account ever granted to a crypto firm. The wall is coming down from both directions at once. And if you're watching this all unfold and thinking, okay, I need to stack, here's the easiest way to do it right. Bitcoin Well is the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your personal wallet. No custodial risk, non-custodial by design, trusted by 50,000 plus users, publicly traded, daily recurring buys available. Sign up at bitcoinwell.com/simplybtc. Through our link, you get 3 chances to win 1,000,000 sats. That's 0.01 Bitcoin. Not nothing. So sign up at bitcoinwell.com/simplybtc. On March 11th, the SEC and CFTC signed a memorandum of understanding officially ending decades of turf wars over who regulates what in crypto. These two agencies have been fighting over jurisdiction since Bitcoin was in the single digits. Different rules, different definitions, different enforcement priorities. Crypto companies were trying to navigate 2 sets of conflicting signals from 2 regulators at once. That's done. Real-time data sharing, joint meetings with regulated firms, coordinated enforcement, and the key line, aligned regulatory definitions for crypto assets. SEC Chair Paul Atkins said the goal is to deliver clarity market participants deserve. Clarity. You know how long we've been waiting for that word from a sitting SEC chair? The last one used it like something that he was withholding on purpose. This one said it like it was the goal. Because it is. For every institution that said we can't touch Bitcoin until the regulatory picture is clear, the picture just got clearer. Let me close with something that flew under the radar this week. Tether, the company behind USDT, the world's most used stablecoin, just invested in a company called Arc Labs. Arc Labs builds programmable infrastructure that lets stablecoins and payment apps run natively on Bitcoin. Not Ethereum, not on Tron, on Bitcoin. Tether CEO Paolo Ardoino says stablecoins were born on Bitcoin and expanding access on the Bitcoin network remains a priority for us. USDT, $140 billion in stablecoin liquidity, coming home to the base layer. Right now, most stablecoin activity runs on Ethereum or Tron, and Arc Labs is building the rails. Tether just backed them. When the world's most used dollar substitute settles on the world's hardest money, you don't want to be on the sidelines. That's not nothing. If you want to be in the rooms where the next chapter of Bitcoin actually gets written, Mining Disrupt is where that happens. The world's largest Bitcoin mining expo, biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, live-streamed keynotes and networking you cannot get anywhere else. Grab your tickets at miningdisrupt.com and use code SimplyBitcoin for 20% off. Do not sleep on this. Here's what I want you to walk away with today. A Bloomberg strategist said $10,000. Bitcoin is at $73,800. The bear is wrong. A former prime minister of a major nation called it a Ponzi scheme. Saylor corrected him in 1 paragraph. The politicians are confused. They're boomers. Go figure. The Senate voted 89-10 to protect your right to transact money the government can't surveil, freeze, or program. And the people managing the most money on earth, Larry Fink, BlackRock, the big allocators, bought $1.7 billion worth of Bitcoin while retail was panicking. They all tried, they all lost. Bitcoin is up 11% since the war started, back to a 1-month high, USDT coming to the base layer, and the Senate just gave the surveillance coin an 89-10 no. That's not a debate, that's a rout. Thanks for watching Simply Bitcoin Satoshi. Don't forget to smash the like button and share the show with your friends. Drop a comment below. I read all of them. Follow me on X at InternetSophie. And as always, stack, slay, and stay bullish, baby.